Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine the show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Nick W., Jackie A., and Paul M. New guest, Mark Haywood, is on the show today. Mark is President, CEO, and Director of ScoZinc Mining. The company is advancing to restart the Scotia Mine, a conventional open-pit zinc-lead mine in Nova Scotia. The company is listed on the Toronto Venture Exchange under the symbol SZM and also on the US OTC markets under the symbol SWNLF. Mark, welcome to the show, and how are you, sir?
Thank you, Andrew. I'm very good. Appreciate it, your time and the opportunity to be involved in your weekly radio show.
Well, it's good to have you on, and you're a new guest on the show, and I suspect most of the audience is probably not familiar with you, Mark, but maybe just cover your background and past experience in the natural resource business.
Good question. When you're running a mining company, that they like to know the CEO has been involved in the industry before, so I'm happy to mention that the fourth generation in the mining business. I grew up in Australia and Canada. I went to university in Sydney, Australia, where I obtained 2 bachelor degrees. So one was in mining engineering, and with a focus on the underground and open cut operations or open pit operations. And the second degree was in law, with a focus on contracts, international law, mining, the environment, occupational health and safety. Essentially was tailored towards the mining industry. I'm fairly detailed orientated, and my focus was on part of that experience, and part of obtaining that degree was to get some real world experience as an actual miner. So I started working on that by operating trucks and loaders and excavators and rope shovels, you know, name it, and doing a lot of labor work, including drilling and blasting, underground drilling, surface exploration, surveying, and so forth, just to essentially to build out the practical experience, gain a solid practical skill set. And that essentially was about 12 months of labor on the mine sites before I moved into the technical side. And really, I thought that was important to have a solid background before moving into the technical and more managerial aspects of a career in the mining industry. After that, I started a training program, graduate training program with Placer Pacific, and working in their 3 mines in Australia, 2 in Western Australia and 1 in Northern Queensland, and both are in the Australian ATAC, of course. And so that started on my typical career progression from a graduate mining engineer to mining engineer, senior mining engineer, chief mining engineer, mine manager, and then ultimately general manager. And so that was 14 years of experience. During that time, I had my law degree in my pocket, and that was essentially complementary to the engineering side. A little bit unusual, some might say, but really they are very, very much entwined. Law, as you can imagine, and its association with mining companies and mining operations, and it became more and more useful, that background, as I progressed through towards more senior roles. In terms of work experience, I've also worked around the world, in Australia, West Africa, Ghana, Guinea, Burkina Faso, Solomon Islands, Papua New Guinea, Burma or Myanmar, and working for some large and small companies, including, as I mentioned, Placer Pacific, Ashanti Goldfields, BHP Billiton, and Goldfields as well. And so covering a lot of different commodities: gold, copper, zinc, and lead, and coal. So since 2006, I've been in the C-suite, either as a CEO or other key decision maker, and back in Canada since 2008. A world experience in terms of my career to really move it along. And it wasn't until 2006 that I started mining exploration companies, actually. And I've been either private or public. So I've been CEO of a TSX or a TSX Venture exchange listed companies in both North and South America. So in total, had about 25 years of pure experience in the mining industry, which I believe brings me the confidence and on-job expertise required to successfully run a mining company. So with that, last year, August of 2019, I became the president and CEO of ScoZinc with the clear mandate to move the project forward. And one of those aspects was see what we had, bring it up to the next level, and ultimately put it into commercial production and potentially take advantage of improving bull market.
Expansive background. I think it always pays really well to get your hands dirty and to do those early stage, stuff that you would do in your career. And I think it makes sense to be able to be on the ground and do those types of activities on these projects. Now, before I get to the zinc market here, maybe just briefly tell us the story that what led you to ScoZinc, who called you, what happened, and why did you take the job?
A group of investors saw the company moving along, and they contacted me to see if there was something we could do to it, because they obviously had a lot of capital invested in the company. And so that was, I did a due diligence on the project, as I'd normally do for a number of other clients along my career. And I was quite impressed with what they had done to date, but also the opportunity to move it forward. And some of those aspects of naturally based on the resource, it's a huge asset in Nova Scotia, but on the cusp of being back into commercial production, but it was something missing. And that's really why I came in, and why I was asked to come in, was to determine what that was. The company had considerable debt and it needed to advance to rectify that debt situation, but also to move the project forward. Being a permitted operation, which could go into commercial production very shortly, that's a very compelling opportunity for a mining engineer like myself, is to bring these things back into production and create value for the stakeholders. And there's many. They're not only the investors in the company, but the local government, Nova Scotian government, taxes and so forth, and employment. So regionally and locally, this is a very important project. And that was also the idea of me coming in, was to see if we can turn this around and make a difference.
Well, let's move to the zinc market. It's been down. It had a nice run a couple of years ago, Mark. Your view on zinc here, what do you think on the supply-demand status? And then also, what is your expectation on price to be over the next, say, 1 to 2 years?
Sure. It was looking good when I joined, but obviously we weren't ready to go into commercial production. So the initial COVID-19 shock in March this year disrupted some of the ideas behind that. I think it was building up. But as you know, the zinc price dropped down to about 80 cents a pound. But since then, since March of this year, we've seen some recovery in that. You would say it's quite remarkable, going from 80 cents up to $1.25 a pound just yesterday or a few days ago. And so that represents tremendous appreciation in the order of 56%, making zinc one of the best performing commodities since the start of the pandemic. And I think you would say that's also this year, that's virtually a major increase in that. So the outlook, I think, is quite good, certainly for the next 2 years. The price pressures that have happened in the past with other operators, some unfortunate events in South Africa with mine shutdowns and other country-imposed restrictions, travel restrictions on zinc mine, they're all creating pressure on the commodity. And I think this is essentially a relieving pressure. On the demand side, we saw a sharp decline in economic activity in Q1 of this year. China came back to pre-COVID levels, if you like, in Q2 and Q3 of this year. So that again generated some degree of rally, and mainly forged in China. But we expect these to continue for the next few quarters as China's appetite continues to be strong. And as Western nations, I think, make progress on dealing with the virus and vaccines, and we see that culminating probably next year. I believe our timing is quite good in terms of getting into production. Commercial production is a 9 to 12 month time frame from financing. So that's definitely an opportunity. And a final thing for the market, not many people realize this, and that the treatment charges for zinc concentrate and even lead concentrate, that has a big impact on price as well. So not only have you got a price increase just straight on zinc price and also lead, but the costs of processing that or treating that has come down considerably. When we did our pre-feasibility study, the prices were looking to be $250 a tonne to maybe even higher than that. And they've tumbled to 2-year lows of just under $100 a tonne as operators are competing, as smelters are competing for concentrates. That has a big impact on the economics of a project. And I think our economics for the Scotia Mine have really improved, although we haven't done any additional studies since July. But when you put those numbers in, those forecasts into our model, just shows that it's even better than we envisaged. So that's really, I think, a good outlook for the company. Definitely on the short to medium-term outlook for zinc prices, I'm very bullish on those.
And I certainly agree that I think we have some pretty stable pricing coming up. If pricing can hang where it is today, I think this project specifically is looking pretty good. Now, definitely zinc done well. We've seen silver do very well. Gold's done well. Uranium has really done well as far as the underlying, not the equities, but certainly the underlying material has done well. Well, how about just briefly, and then let's get into ScoZinc, talk about lead for a moment, because lead is also an important part of this project. What's your thoughts on lead and how that market is shaping up?
That's essentially a byproduct of our operation. So it's an important aspect because it reduces the overall cost of processing the C1 cash cost for the mine by adding that in. I think it's also improving, but not as much as zinc. So I'd be mildly bullish on that as well. We've applied fairly conservative factors into the cash flow model for lead. And so if it does better, then it's just additional revenue for the project. In essence, the mine's cash cost or all-in sustaining cost is 60 cents per pound. And if the zinc price, that's a long price, life of mine price. So if the zinc price is $1.20, then essentially we're making 60 cents a pound, which is considerable margin. When we start off on the first few years, it's much higher than that, but it's still 30 cents to 40 cent margin. So I think lead is an important aspect of it. We also have some other opportunities to add additional revenue into the project as a byproduct. So we'll talk about that another day. But I think overall the commodity for the mine, both lead and zinc, are right in a sweet spot for us.
I think it's an important aspect to have kind of at least the minimum, got the zinc and the lead going, which, certainly better than some of the assets that only have zinc. But I want to talk more about costs in a moment, Mark, but let's just go high level overview at ScoZinc as far as the capital structure, key shareholders that you'd like to point out. And then also, can you talk about your ownership level, cost basis for the shares, and then of course, cash on hand at the moment?
In terms of capital structure, a very tight structure, especially for a junior mining company. We only have 14 million shares outstanding and about 7 million warrants and just under 1 million options. So it's very tight. A lot of those shares are in known hands, if you like, so it's thinly traded. But we're working on that. Most of our shareholders who have come in don't want to sell. They just obviously see the opportunity to be part of the company and to grow their position and their value. So we really only have other groups that are just selling, who have a small number of shares that have left over from Sylvan Resources days. So as I mentioned, I joined last year in August. We've had 2 capital raisings since then. A lot of those new shareholders came into them. Our new chairman, Ashwa Mehra, he came in, and Mick McMullen came in, and have been long-term shareholders, at least since I've been involved. They participated and have a very strong position, get on well with them. I think they're excellent shareholders. And we have a group of other shareholders related to them, and part of my team as well have come in and see what we're doing. And I like the opportunity to be involved. So that's why I mentioned they've got a good position and it's thinly traded, because we're executing on our strategy. And we have a legacy shareholders who Korea Zinc and the estate of Lloyd Miller III, and the rest is essentially held by high net worth individuals on a larger scale anyway. And so I think we're in a great position, being tightly held, thinly traded. That has its advantages, but improving. And you see in the share prices increased, the market cap's increased, and that's part of the strategy, creating value for our shareholders.
And Mark, can you talk about your ownership level and a cost basis if you have that, and then cash on hand? And then also, I understand now Ross Beatty is still a shareholder. Is that correct?
Yes, he's just under 10%. So he's part of the new investors who have come in, including myself. I have quite a large position, 6 or 7% of the 14 million shares. put a fair amount of capital into this company as well, and my time, and working full time on this. So it's it's a great project, and it's worth being involved in. Our cash position, I think we're just under $500,000. So we have sufficient cash to get us through to February or March, or even more next year, working on the finance for the operation.
Can you maybe speak just to the management as a whole, Mark? You guys had a couple financings that were, not far below where the current share price is. Can you just maybe speak to where, management and these key shareholders came in at? I want to say it's probably somewhere in the neighborhood between, 30 and 50 cents, if I remember correctly.
Yeah, absolutely, Andrew. That's right. The last two financings have been at 30 cents and 40 cents. And we raised over $2 million in two separate private placements. I obviously participated in that. They were both oversubscribed to the maximum allowed. So it was a very good start for the company. And we've used that capital very wisely, I believe. We've got our costs down considerably, and we still have cash in the bank. With that capital, we also have advanced the projects considerably, doing resources and reserves and the pre-feasibility, and plus advancing the environmental aspects of the company and permitting side of it. We're moving all those forward as very quickly as we can. We have a great team on board in terms of management, myself and Rob Suddy, it's the CFO, and we have Simeon Candrea, who's our VP of IR. So we have a small team, and we have a great board as well. We have a total of 4 directors right now. We just had some changes, and two of our long-time directors retired, and I appreciate their time and their involvement with the company, and we had a good rapport. So I think going forward, we're in a good position. The team on the ground is focused on their tasks, and the company is in good shape now.
And Mark, talk about an overview of the pre-feasibility study that was recently completed. And then are you content that this study is enough to take this mine forward into restart?
This is the first ever pre-feasibility study, or PFS, on the Scotia Mine. And that's a major milestone to have completed that. There was a collection of smaller, virtually internal studies and repeat preliminary economic assessment. But for a mine that is permitted, it's quite unusual not to have some degree of reserves and other studies of that high level, even because it's a brownfields project. So we issued a new resource statement, which essentially validated previous work, and we put a press release out in December of last year on that, so it's quite detailed. I'd encourage your readers to look at those, and that was a low-hanging fruit, I believe, but essentially a doubled resource space, which led to some high degree of confidence in producing a mineral reserve that was larger, or at least achievable. And we did that as part of the pre-feasibility study. That it was the first ever mineral reserve on the project to NI 43-101 level. The mine used to be an underground operation in, I believe, the 70s, and then it was mined as an open pit operation for a couple of years by Acadian Mining in 2009, 2010. And really, it hasn't really advanced. And there was some catalysts behind that, but we believe we've fixed all that now with the work we've done, including geotechnical work, the detailed mine designs, pit scheduling, all the planning that you could imagine goes behind building an operation. When you're talking about my practical experience on the mine site, I was driving all that. I fully believe this is an operation that we can put in production in the short term. And so what do we need to do in order to do that? Execution strategies, detailed planning, and then the permitting and moving that along so we have all the stakeholders on board. So the pre-feasibility study resulted in the first ever mine life, and that was 14 years. So that's a significant opportunity, not as if it's a large capital requirement and it's only a 6-year mine life or something like that. This is all open pit. It's a long-term mine life. It's quite straightforward, really. It's one of the nicest operations I've had the pleasure to be involved with. Secondly, I believe our assumptions in the PFS are fairly conservative. We're in first world jurisdiction in Canada and Nova Scotia. We're 62 kilometres from a deep water port on all-season highway. We have a mill that's fully built. It just needs a little bit of refurbishment. We've detailed that in a pre-feasibility study, and we're working on reducing some of those costs. We've included the nominal discount rates, but overall, this thing has a very compelling net present value. This is all conducted by industry leaders, independent experts, Senko Engineering, SRK, Minetech, and Terrain Geoscience. The results, as a summary, were very good, very compelling. We can go through those if you like, Andrew, but I don't know whether your readers want to see that detail, but it's a small amount of money, $30 million Canadian, long mine life and excellent cash flow.
It is very compelling. The CapEx is fantastic and easily achievable. I mean, comparing to other projects. Talk just a moment about and I want to get to some of the other aspects that you mentioned here in a moment, but can you talk just about the total cost that you expect? I know you mentioned the all-in sustaining costs of around 60 a pound zinc, but when you guys tack on the G&A costs company-wide, and I know that you've got expected project exploration and expansion plans, probably at cash flow point in the future after production's ramped up. Do you see the total costs still coming in, Mark, at sub $1 a pound zinc with the lead credits and all of your, expansion potential?
Absolutely. The pre-feasibility study is fairly conservative, but it also produced very robust results. I'd say that just looking at that side, we're very, very much below the $1 a pound, which is going to increase our margins. We're working on more and more strategies to reduce the cost below 60 cents a pound, and that's including all the G&A, that's the lead credits and so forth. So I think the PFS is naturally, you've got independent experts involved and they like to be conservative in many ways, and I think they had a good balance of that. But there's a lot of other opportunities to reduce operating costs and improve the margins. One of them, I think a lot of people may not realize, it's a very clean concentrate. It's a carbonate-hosted deposit, and so there's very minimal impurities. There's really only one, and that's cadmium, and it's on a very low scale anyway. So it's well sought out by traders and smelters alike, and we believe that's going to translate into a premium for our concentrate. We haven't factored that into the cash flow either. So I think there's other things as well in terms of the project in operating costs, the power costs, other byproducts we could potentially add in, and that's gypsum. We have to mine through it, so it has essentially a zero cost to remove it from the ground because it's already paid for by the lead and the zinc. And so that's an opportunity to lower our costs and drive those all-in sustaining costs and C1 cash costs lower.
Well, talk about the exploration and resource expansion, because obviously the project extends much beyond the existing mine footprint. Talk about what your plans would be on exploration, resource expansion potential. What do you think is out there that has not yet been uncovered? And is the plan to fund the exploration work and resource expansion later from operational cash flows expected probably, potentially late 2021 or sometime in 2022?
The first point is the expansion. Really, the work we did last year on the resource estimation, that was all done to 43-101 by SRK. So we're very pleased and confident that discovered a lot of emissions. So now, because we doubled that resource, that put us to 25 million tonnes. So that in itself is a huge resource increase from the 6 year that was envisaged before. With that, of course, converting into a reserve, you lose some of that, on the economic side. So 14 years is a very good starting point. Because a lot of this mineralization and the carbonate is close to surface, the exploration costs are very low. And so we could look at some flow through next year to potentially increase that, maybe increase the grade. But in all intents and purposes, we're really quite well positioned in terms of drilling for the first 6 to even 8 years. So it would just be essentially just cream on the cake to do some additional drilling along some of the perimeter areas where the old underground workings were to improve that. So that along strike, certainly there's an opportunity to expand that. We have some other prospects that are on strike that we have exploration licenses over. So there's an opportunity to do that and potentially push it way beyond the 14-year mine life. But the funding would be, and it's not expensive to drill in there because it's very quite shallow drilling. That would naturally be funded out of either flow through before we're in production or during the production and revenue as part of the free cash flow.
I want to talk a little bit more about some of the other items here in a moment, but you mentioned permitting and local community work. Can you just talk about that for a moment as far as the status of local community work that's been done and planned to be done? And then also, are all of the permits in place now with no need to do any modifications, or do you need some modifications to restart?
The mine's been there for quite a while, and so the community is well aware of that. We haven't advertised broadly that we're going to production because I don't know exactly when we're going to hit production because it's contingent upon the finance. But we have quite a good chap with us. He's doing our environmental and community coordination. So he's poised to advance some of those aspects and engage with the community specifically about timing. At the moment, we're just working quietly and engaging on a one-off basis, if you like, to communicate that. But essentially, until we have the finance in place, I don't want to trumpet that we're going to be in production and deliver some false expectations. However, we are involved and communicate frequently with the government of Nova Scotia, who are great supporters. They've been involved in our recent technical report financially, as well as generally supporting and communicating that approach. We believe that the community is quite good. And definitely from my experience, as we go towards the production decision, we'll be more and more active in that area. In regards to permits, we have essentially 2 environmental assessments, and one of those is in good stead. The other one, we're just working on the renewal right now, an extension. It's essentially a date extension, waiting on a few things, but we expect that to be in place. And that gives us a mine life of a minimum of about 5 years based on those parameters. With the pre-feasibility study, we weren't expecting it to essentially go to 14 years mine life. So that would require an additional EA on those extension areas. We'll do that in due course once we're under production. So there's no hurry for that. The ground is under our EIs or on our mining permit anyway, or our mineral license, if you like. So we will advance those naturally, but at the moment we have sufficient permitting in place to commence production within the 9 to 12 months.
That's perfect as far as, it's much easier to expand and modify permits once you're in production. And of course, it's much easier on the cash flow standpoint is when you have
Absolutely.
cash flow coming in. It makes it much easier from a cost standpoint. Well, talk about
true.
the financing package, Mark. What is the most likely mix? I mean, share what you can here, but what's your thought on mix of funding among maybe some debt, maybe offtake, royalty stream arrangement potentially, and also what portion can the shareholders expect in equity?
Total number we're looking at is about $30 million Canadian, and that's really what the pre-feasibility study defined. That comprised of mining costs, pre-stripping costs of about $8 million, capital costs of equipment of about $1.5 million, the mill refurbishment about $4 million, cost improvements to the mill about $8 million. So that's quite a large number. But, in terms of getting a project back into production, compared to some of our peers, it's a fraction of what they would need. My point here is that although it's in the PFS as $30 million, we're working quite hard on reducing that. I don't know what that number would be yet, but some of the indications are we can improve the mill at a much lower cost by changing some of the equipment out or changing some of the assumptions. So we're working through those. Obviously, any changes to the mill and to the process require the government to be involved. And so we're just looking at what we need to do on that and whether it's a good opportunity or something we would do in due course. So in terms of that number, $30 million, we believe it's a combination of equity, debt, and offtake prepayments. Because it's such a good concentrate and it's a well-known concentrate, I can say that we're working with a number of different groups, and that's looking promising. We haven't press released anything in that regard yet. There's a lot of scenarios that we're working through, and certainly we have a lot of interest from investment banks, from Bay Street here in Canada, and to other groups that see this as a no-brainer. And definitely there's an opportunity to be involved in a project and a company that is well positioned to both go back into production in the short term and take advantage of these high prices. So they're all in our data room. We're in very active discussions, and we hope to have a result out of that as soon as possible. COVID hasn't helped in terms of that process of due diligence and site visits and so forth. So we're having to be quite cautious about that. And that's slowed, I believe, the process down somewhat, but it's still going on nonetheless.
Yeah, and Mark, do you think that the maybe a staged approach, chipping off a couple million here and there and taking kind of a staged finance approach makes sense for this project given the small capex? And then there is no royalties on the project, is what I understand. But can you speak to, maybe the timing here? What do you think as far as maybe getting the financing secured? Is that something you guys are going to do in 2021? Do you see that first zinc concentrate can happen in 2022? Maybe just give us some timeframes.
Okay. In terms of the staged approach for financing, I believe that the $30 million is not a large amount these days for a project of this size. So I think it makes sense to focus on the 30 million, and really that's what we're targeting on. As I mentioned, a combination of equity and offtake. I'd rather not go to the market and dribs and drabs on this, but that's also an opportunity. I think the PFS delivered some very robust and compelling results, sufficient enough that we can execute on that capital of $30 million and put it back into production within the time frame. The stage approach may be more as opposed inside the debt and equity component, completing let's say a $10 million financing, and the balance of that is on debt and on offtake. That would probably make more sense. There is a small royalty to the Nova Scotia government. That is quite an opportunity, I think, for the government. It's a 2% royalty, not a large royalty by any means, but important for the province as well. In terms of the financing, I believe that this year has been quite unusual. I don't expect to have financing in place this year, and we really never expected it to have it done in such a short period of time, especially over COVID and all those restrictions. So I expect that to be in place early next year. And regarding commercial production, there's a time range for that, and it depends on a few things, of course. Some lead items, long-term lead items that we included in the PFS have about a 9-month time frame on that. So we may well defer some of those. They're not critical items. They're just improvements to the overall recovery. But if you discounted those, then we could be in production within the 9 months at the very earliest from after financing. So that would potentially put us in place in production at the end of 2021 next year. But we also have to look at the seasonal aspects of it. Do we want to be in production in the dead middle of winter and declare commercial production in that period of time? Or do we rather wait a couple of weeks or a month and set it all up in the ideal operating conditions? So those are the opportunities I would look at once the decision point comes along.
Yeah, a short time frame, and if you guys can get financing in the first quarter of next year, that's well done on timing if you can do that. But definitely sometime in early 2022 for production.
Yeah.
Sounds like a pretty reasonable target. Well, what do you see, Mark? Looking at exit strategy for the company, what do you see? I mean, do you see this company, running a mining company, being a producer? Do you see room to expand? And obviously, you guys, once you become a producer, you're going to become a depleter. Do you see expansion beyond the Scotia property? What's your thoughts on that? Or do you see potentially that there's a buyout at some point in the future? What are your thoughts on exit strategy?
My focus is on getting this into commercial production right now, and I think that's going to be a major catalyst for the company and certainly for our investors. My focus is on building the company up, and I think that's going to create some incredible opportunities for the company in terms of the market cap and valuation of our share price and so forth, but also the ability for us to do additional things, leveraging off this project. We're surrounded by other potential resource prospects, that some of which we have in our portfolio, zinc and lead, which would be trucked into the operation to lengthen the mine life. We also have a very large mill. We believe it's the second largest in Nova Scotia. So we could potentially process other material, at least crush it and grind it, and we'd have to go through the permitting process with that. But it's huge infrastructure in place right now, and it's brick and it's concrete and it's a lot of steel. And that's worthy, I think, of looking at many other opportunities. And that's one of the reasons why we looked at changing the company's name to SCO Metals or some other such name to essentially take advantage of our region for the project. So I believe the exit strategy will be dictated after we get through to commercial production. I think our shareholders would like to see the appreciation of the share price as I do. And so it's hard to say. I think a project in production is worth a lot more than a project that's been on care and maintenance for some time. So that's my focus. And I think my expertise is on getting these opportunities advanced. That's really going to be the value creating opportunity. We are a commercial production or new-term commercial production story. It's a low C1 cash cost. It's built, it's permitted, it's essentially ready to go. And the fundamentals from zinc are improving quite well, and we're going to take advantage of those, of that marketplace. Albeit, we have a very low operating cost in the PFS. So even if the prices were depressed in the future, we'll still be operating. This is a clean concentrate. It's a very simple process of winning the concentrate and getting it to the market. The logistics are excellent, so that all goes into lowering the operating costs and the longevity of the operation.
Yeah, the project has been substantially de-risked, and I think the final risks are really just, getting this sucker into production and going. And, I think that's where the final risk lies, and I think you've got the team to be able to achieve that. And on the downside, like you said, you've got a lot of cushion on the zinc price. That's a really good setup as well. We certainly like what's happening there. Well, Mark, for the audience, so ScoZinc today sits about 8.5 million Canadian market cap. What do you say to potential new and even existing investors who are looking to establish and increase their position with ScoZinc at current prices and in front of a potential restart financing?
Other than be involved in the company and take a meaningful position, I'd say to look at our opportunity. We're certainly executing a strategy. Since I've joined, I think we've made some great advances, not only on the project from cleaning up the corporation and advancing that to be on the cusp of creating an enormous value for our investors. So there's not too many stories out there that have permitted mine with strong, robust economics, which are Canadian owned. You can, aside from COVID, you could essentially fly from Toronto in the morning and be on the mine site, have a great tour and understand the project and the team, and be back at Pearson with a lobster from the airport. It's a very good location. The logistics are excellent. We've fixed the company in terms of some of those aspects of debt, and we've changed a few things. We've strengthened the board. I think this is a very unusual opportunity for investors to be part of a growing story that has a lot of opportunities, not only for zinc and lead, as I mentioned before, but we believe it's a very compelling investment thesis for the prudent investor. They can leverage off the zinc and the base metal space by investing in a first world country where there is a rule of law, there's high environmental standards, and there's very strong transparency. Look through our press releases, you see that. That's what I've tried to do. Tell the real story of what's happening and put a strong professional team behind that. So you know that we're not just creating stories, we're actually building a mining company that has the opportunity and the legs to go the full distance.
And the best way for the audience to reach out to you and the company?
They can contact us through the website. There's links to that, info@scozinc.com, or they can reach the company at our reception in Halifax. We have a facility there. They can follow us on LinkedIn and Twitter and Facebook. And of course, reach out to us in any of those different methods, and we're happy to provide as many answers as we can. We try to be as transparent as we can. All our records are up to date, and we're just moving this along. This is a story that we'd encourage investors to take note of and obviously to be a part of.
Well, Mark, this has been great. Good to chat. I really appreciate the introduction to ScoZinc, and thanks for coming on the show. Keep up the efforts.
Thank you, Andrew. Appreciate your time, and thank you for this opportunity to lay out some of our plans.